Right, so thank you everybody for joining us. We've got obviously Dave with us this week. So Dave's going to take us through a bit of a session over mortgages and protection. I gave a bit of an intro in the Facebook event, but yeah, obviously Dave's going to take you through it all. But yeah, nice one, Dave. Massively appreciate you coming on. I know it's been long overdue, but we finally got down to it.
Yeah, good for you.
But yeah, how are you, mate? What have you been up to recently? What are you doing?
Well, drinking with you last week, was that the week before?
I can't remember. One of them.
And yeah, just running around. Lockdown hasn't really hit the north. I've kind of noticed they haven't really taken any
No.
So we haven't just stopped for a year and a half, but it's been full on. But yeah, a lot of travelling, a lot of driving around, all that kind of stuff. So.
TMG is doing amazing, isn't it?
Yeah, we're cracking on. You know, we've got to 50 brokers in our AR network, which is tough to build with the regulator as they are, I have to say. I'm conscious that this is being recorded, so I don't want to be too...
yeah, there's always that.
They can be relatively challenging, and I understand they're going out on strike. So
right. Nice.
Well, the cat's away, they might as well play.
Yeah, exactly.
Bonus. Yeah, well, do you want to take it away then? Oh,
do you want to share the screen with me, Dan, and then I can crack on, mate?
So, can you do it now?
Let's have a look. Not just yet.
Let me do it, because I tried it a different way earlier with someone else where you go to security. I'm crap at this.
No, you're all right.
Ash is always ribbing me for it. But
is he all right? Is it Paul, isn't he?
Yeah, I'm here.
Is he? It's made.
Where is he?
Yeah, I'm just here. I'm just quiet. Yeah, I am Paulie.
Oh, yeah. Hello, mate. Nice to see you.
He must be on death's door. He's been quiet.
I am beyond sick. Like I'm fine right now, but God, wow.
I have to say, I saw you on that video on your dog walk, and I thought the lad's not well.
Oh, mate, terrible, like absolutely terrible.
What is it that you've had, like?
Just my son had a stomach bug, and then that just like projectile vomit, and it just next thing you know, my wife had it, then I got it, then my parents got it, then my mother-in-law got it. It was down, and oh, mate, honestly, it's written us off.
Sickness.
Yeah, full on like projectile vomit.
Wow.
I mean, I've been sick at least 40 times in the last. Yeah, it's like 5 hits each time. It's like what, and you're like, oh.
In the spirit of that, I think that my rainbow themed.
There you go.
Presentation.
But I said, don't worry, Dan, because Dan was moaning at me today, saying, he was saying message saying, well, you better come, otherwise I'm not going to pay you. And I said, Dan, I can hardly walk or anything, but you know,
bullshit. Don't listen to what I'm saying. A word Ash says.
Okay, so
anyway, it's Dave's session. I thought you were
you're filling it for me. It's great because I don't think I've got 45 minutes. I've got to be honest.
It doesn't matter, mate. As long as you need.
Fine. Okay, so I wanted to kind of take this on from a slightly different angle because we meet consolidators. Can everyone see the presentation? Okay, yeah.
Yeah, mate.
Great. Okay, so we meet consolidators all the time. There's firms getting bought left, right, and centre, and we'll come on to some of those in a moment. But I don't think the market's ever been better placed to understand the value of a mortgage brokerage, whether that's a one-person firm or a multi-advisor firm. And actually, I think the challenges can often be the same. And it's very easy to devalue a mortgage brokerage based on it not being up together and various other things that I'll cover. But I think it's relatively straightforward. It's all graft, you know, we all have to graft, but relatively straightforward to put the building blocks in place now to get yourself match fit to sell. And why not? You know, if people want to buy, why not exit and do whatever you need? So I'll cover on what people are looking at, what they're paying, all manner of stuff. So we're going to look at preparing your business for sale. 9 ways to get match fit. I couldn't think of a 10th. I'm really sorry. 10 things you can do right now to gear your business up for a sale. And all of these things will really help to streamline and improve your business anyway. And then I'm going to do a little bit on indemnity versus drip, just to kind of cover that off. I promise I will not mention loaded premium throughout this whole presentation. 25 years working in the mortgage brokerage kind of arena, as you can see by that, still 4 years of PRIMIS, a year and a half now with the Money Group, who have a directly authorised proposition and an AR proposition. So we've seen both sides of that. I've got a business consultancy, No Six, which is helping businesses prepare for sale, help them with social media, all manner of stuff. I write protection business within the Money Group for firms that can't or won't do it. So I help them get on the track to do that, and I enjoy a bit of social, and it's been massively helpful for me, and probably where I've met Dan and everyone else. You know, we've just kind of met through this. So these are some of the buyers that are out there at the moment. So you'll see today Howden's decided to get a stake in the mortgage market by buying Savills. Everyone see that?
Everyone can see that. Bloody hell.
Yeah. So Howden's have decided that they want a stake in the mortgage market. So they bought Savills Private Finance today. The deal went through today. So I'm hoping now this is in the public domain. I've just had a little panic, but I'm pretty sure I read it in the FT Advisor. I'm pretty sure. You'll know of Pivotal Growth. Has everyone heard of Pivotal? So Pivotal Growth are a £200 million consolidator linked with PRIMIS, where they are out buying mortgage firms to buy and become the largest mortgage firm in the UK with, 500 billion, whatever else. They're absolutely huge. So they've got a huge fund. Heron Financial are a firm in the background that MAB recently bought. So I've got MAB in the bottom right here. MAB recently invested in Fluent. So Fluent Mortgages, who are a huge packager second charge from memory. I think that's right. It's very unnerving when I can't see any of you, but I should get your faces back up because it's just too odd if I can't see you. Okay, so there's money out there. There really is. And I think historically, and still to a certain degree, your typical multi-advisor mortgage business is a commission club. So I see this all the time. A principal of the firm that's decided to grow, taken on 10 self-employed brokers on a 70-30 split. I'm not telling you anything you don't already know, and it's great for them. The broker coming in, 70-30 split, they get it. There's no real tie-in for them. The principal has all the responsibility, everything else. It is a commission club, and I would question the value in that self-employed model for a consolidator. You can still scale it and make it work, but a lot of these firms are commission clubs. And what I'm trying to say through this presentation, it's good to err away from that. If you want to gear yourself up for sale, your typical one-person brokerage kind of dies when I was going to put dies when you die, but it's kind of true. You're the relationship, there's data there, there's a system and everything else. But unless you kind of plan a bit more succinctly towards it, I think the business can die when you do, and you're not realizing the value that you've built up. That these consolidators here are recognizing that value. So my kind of pitch today is that it doesn't always have to be that way. I say pitch, I'm not after your business because I can't buy it, but my pockets aren't that deep. But there's value and scale even if you're a sole advisor. Consolidators want to bring you in and add value, so they're paying 6 to 8 times EBITDA, whatever that is, so your kind of net income after everything else. They typically want you to stay 3 years and then give you another lump and then offer you to stay a bit more. They're not looking for you to be the finished article, so they want to bring you in and then show improvement. So they want to show that they can improve you moving forward. So if your protection penetration isn't at 105% or whatever, or you're not quite ticking all the boxes, they want to show that they can improve as part of that consolidation. So they're not looking for perfect. So perfection doesn't exist. It doesn't matter if you're nearly there. So I'm going to run through 9 ways to get match fit, and this is the same for a sole mortgage broker and a 50-man mortgage brokerages, just slightly different challenges, but I think the principles remain broadly the same. So the first one is obviously technology and the client journey, and I've lumped this together. Data will always be absolutely key. That tended to be where the conversation stopped. 5-10 years ago, they'd say, have you got data? Have you got MI? Let's have a look at what you're worth. I'll give you 1.5 times revenue. That tended to be where it stopped. But look what we've got now. Client portals. I've put 2 question marks over client ownership, because I think where you stay as a broker defines whether you own those clients. And there are networks out there where client ownership is opaque at best, although they sometimes have options to buy you in-house. But I think to truly be able to sell on market, you need to have contractually the ownership of your own clients. Who owns a client? That's another philosophical argument, but that's really, really important when consolidators are looking at you in a business. Mining your back book is absolutely key. So I'm not going to teach you to suck eggs here, because you might know everything about firms like Dashley and Eligible. These are firms who will delve into your back book on a regular basis and make sure that the client always has the best deal through you. And they're fantastic pieces of kit. Some have an upfront monthly cost, some pay at the back end on a percentage of proc fee. So again, a very easy way to allow your back book to be mined. And that's huge when these consolidators are looking at a business. They want to make sure that you're not losing 50% off your back book, like most brokers are, unfortunately, in this industry, because we are simple beasts, mortgage brokers. We concentrate on new, and it's very hard for us to move away from that. Okay, so this is, I'm going in order of kind of you don't say. So a lot of these at the front end are kind of you don't say, Dave, but you know, specializing is absolutely key. New build at the top of that list, contract to adverse. Regional specialists are very of interest to consolidators. So someone who's got a real strong regional presence. So new build in the Northwest, which is kind of a bit of a captive market, again, is something that's very important. Genuine high net worth is something that they're very interested in. So firms who are genuinely in that market, so £1 million plus properties, dealing with the private banks, although most private bank business can be done in the high street these days, but dealing with that kind of clientele. So low headcount clientele, huge prop fees and fees. And all within that at the bottom there that I should have made slightly bigger was your social media presence has to match your specialism. So I'm talking about David Sharpston contractor mortgages. I'm talking about various other people that I won't mention now because they're not with us, and I don't want to just kind of go too hard on the market. But if your social media matches your online presence, that's a huge step forward in terms of your window into the world of the consolidator when they're having a look at you. Okay, so product density is next. They want to see that you go quite deep when you're advising a client. So protection, GI, wills, none of this will come to any surprise to any of you. Business surgeries is the one that I think is really key. If you are able to demonstrate, and one of my next slides will kind of put a bit more meat in the bones here. If you can demonstrate through business surgeries that you have multiple clients in one source, so you've maybe done the business protection and then you're having business surgeries where you're sweeping up the employees within a business, that's huge for a consolidator. Referrals and income is absolutely so. That you want business. There we go. It might be your GI or provider stats for the life cover you've done. It might be Dashley or Eligible contacting that client to let them know that they're still on the best rate. huge amounts of contact there, 10 times a year for each client to tie them into your business. And because traditionally, GI has been sold as the way to ring fence your client and use GI as a barbed wire fence around your business. However, recent surveys have said that if you leave your GI book alone, it'll actually be happier, i.e. you'll keep more of it on the books. Once you write it, never touch it again. Because every time you go in year on year to have a contact point with your client through GI, you're raising the point that they could get cheaper elsewhere, especially in this market at the moment. So if you write in GI, write it and leave it, and then more of it will stay on the books. An employed model is probably the biggest one, I would say. Any consolidator coming in with a self-employed commission club model is going to really struggle, because they can come in one day, all the advisors could leave on Monday. And it's really key that there's profit and control through that employed model. So that employed model will be key to a consolidator looking at any business that they purchase. Obviously, there'll be exceptions. And typically, these will work through different models. So your 3 times validation model is someone's on 24 grand or 25 grand, I'll make the maths easier. They need to write 75 grand a year before they earn any bonus. So that 75 grand is divided by 12, gives them a monthly target. Or you have them on a higher salary, say a London market at the moment, we're recruiting for a firm in the city where they'll pay 40 grand, but 10 or 15% of everything that they write over that. And either of those models can work, but they give you profit, far more profit, and a lot more control over your brokerage. Huge amount of control there. It's the best way to work an indemnity model. So some of these firms that have been bought have a broker in there writing 3 or 4 or 5 or 6,000 pounds of protection premium on indemnity, getting paid 50 quid a case. So they're on a 25 grand basic and 50 quid a case. So they're paid 4 grand a month, think they're Batman, and you're making 80 to 100 grand of indemnity commission a month off that one individual that you're banking. So after 4 years, you've got 5th, 6th, 7th, 8th year rolling indemnity-free cash flow within your business, which is absolutely huge. And as a one-person firm, you can just scale that down and just save your indemnity commission in a bank. I know it's easy to say and hard to do, but that's quite key to do that. When you're running these models, advisor self-funds the next advisor. So someone on 25 grand on a 75 grand 3 times validation model, their income can pay the salary of the next broker and the next broker and the next broker, bearing in mind that you're going to have client streams to feed them. And then you've got an employed model that gives you profit and control and self-funding each advisor to the next to the next. That's how these firms scale. They scale on that model, a provable model where they can get to where they need to get to quickly, or at a pace where it's absolutely calculated and costed through. This is the one that gets missed, and that's a HR proposition, whether it's in-house or outsourced. Now, I've put in there that the lenders and providers are our auditors nowadays. So I don't think the FCA will be out visiting a firm unless it's under real extenuating circumstances for the foreseeable. I just can't see it because they've got so much going on, and naturally they're going to be stood outside or outside burning bins for a while. But the lenders and providers are the ones that audit your business, but you're the one that audits your staff. So you fit in the middle of that between HR and the lenders and providers, who are the ones you need to watch. Even if you're in a network, they're the ones you need to look at, and the network will kind of fight your corner on that. But a HR proposition is key to making sure that you have a safety net around your business, and it doesn't have to be expensive. There's good, bad, and indifferent out there, but there's huge HR propositions out there and benefits that you can do. Recently wrote some business protection and some MetLife products for a firm where it counts as kind of, for us, a bit of employee benefit stuff, and it's been worked very well. So there's loads you can do around that. This one's pretty key for me. And when we go into businesses, the first thing we look for is an ops manager. that there's someone in there with operational control of that business. I don't know if anyone's been listening to the good-looking fella off Dragon's Den. What's his name?
Stephen.
Not Theo Pathetis, the other one. What's his name? He's got his podcast, Diary of a CEO.
People about themselves on mute.
So that's the Diary of a CEO guy, as the guy that's doing the podcast. He interviewed, who's the lady off, gone blank, who's the lady off The Apprentice? Brady. Karen Brady.
Yeah, Karen Brady.
When I listened to this morning, leadership versus management is absolutely key. They're not the same. Management is the day-to-day running of an operation. It's like greasing the wheels, it's machinery. Leadership is the vision. So as leaders of businesses, as you will be and are, you need an ops manager, an office manager, and an admin manager. And when a consolidator is coming in to audit your business, these are the areas where they need to, where they go to, and these are the people that will open their books and say, this is the business, because we are not the people to do that as leaders and sellers. We're just not. You need this critical team underneath you to build that monster. Within that specialisms that we talked about earlier, having specialisms, within that staff structure, you need specialist staff. So some of the businesses that we have seen and worked with in the past will have a Remo only advisor or a PT only advisor that might do 70 mortgages a month on their own. There's businesses out there where the remortgage only advisor, also that another advisor does the Remo every time. So no advisor does the first mortgage, the Remo, and then the second Remo and the third Remo. So the relationship is with the firm and not the advisor. That's absolutely key. You have a protection only advisor, in my eyes, on indemnity, write an indemnity commission that you bank and save because it gives you free cash flow in the business. As long as you stay over 85% on the books, that's going to be a cash flow driven model that works really well. And consolidators are happy with that. They don't mind you writing indemnity business. GI, so you want a GI only broker in the business, which again, we all bang on about all the time. But again, going back to lockdown, one of the first things we looked at during lockdown was who would survive. And we thought we would lose 60% of brokers out of the industry. That was the call that we made within PRIMIS at the time, before Rishi Sunak said, actually, we're going to help out. And now we're kind of the flagship for the economy. We've been propping it up. But we looked at who was writing GI, and we had firms doing $3.5, $4 grand a month because they've been doing it 20 years and they'd listened 20 years ago. And we knew they were the ones that would survive because they're recession proof, because they've got 60 grand of recurring income coming in forever. Business protection is key. Front of house is key. That relationship when someone comes in, whether it's electronically or physically within a business. And obviously the back end, the Dashleys and the eligibles of this world, where you're looking at the back end of the business to make sure that that's catered for as well. I think this is the last one. Yeah, so this is probably the most important. I think I've said that about 4 of these slides, but do you have a defined culture in your business? This is something that we've been asked in TMG, and it made us question and made us think, okay, well, what is our culture? What are we all about? What are we driving towards? How does our culture play out on social media? What's people's impressions of us? And look, when we looked at that, it wasn't all good. We were being a bit of an arse. I know a bit of parkour and all that stuff. We're very funny and whatever else. But were we really projecting our culture out there? And was it the culture that we wanted to push out there? I've put culture club just because I wanted to make a joke, but it's not very funny. But these are the kind of things that are really key. And that culture needs to play out on social media. They need to be able to get a gauge for your culture. So I would point you towards Heron Financial and the stuff that they do. That's my go-to when I'm trying to demonstrate culture and how you can get a feel for a business and just by looking at them on social media. It's really, really key. It happens to everybody. We're so busy. It's crazy. The phone rings in, which it won't forever, but you can't protect forget protection at the moment. You know, there's a huge protection gap. It's really, really key that you don't forget protection. And there's a 75% plus penetration on from mortgage to protection. That's where we're kind of aiming for within TMG to make sure everyone hits those. We want 100%, but that's just a bit greedy. Indemnity or non-indemnity. So should you take your money up front or should you take it on the drip? So I can't spell attractive there, but that says a lot. But indemnity is still attractive to consolidators. They want only 15% falling off the back end, and they want it done properly. So they want people to have had their protection portfolios reviewed using systems like CI Expert. They want to know that your contact rate with your client is huge. They want protection to be built within portfolios that are professionally done, that GI is built in at outset, and that wills and trusts are a key part of your business. So I don't know if it's on the next slide. Yeah, it is. So managing protection in this busy market, it's all about process. It's all about getting it right. And you need people to come in your business, your ops manager, to say, I need to get this right. This process needs to be super slick. So you're not losing it, because it's so easy just to move on to the next mortgage because they've phoned in and it's easy and you can place it with Santander and the fee's 400 quid and then the next phone will ring again. But we've got a duty of care, which people know is said a lot at PRIMIS, and it's stuck with me. We have a duty of care and professional responsibility to make sure individuals are left with the house and not the debt. And that just rings true. There's Coulson for you. A dedicated protection business writer is huge for a consolidator looking at you. If you're going to lose the deal online, then premium sacrifice, you know, give up a bit of the premium, a bit of the commission and make the premium lower just to get that business in. Again, I'll be careful here in terms of who I'm speaking to and where your level of skill is around writing wills and trusts. I'm associate will writer now, and I did a course a couple of months ago, and it was more interesting than I thought it would be. But the protected property trust was the area that I found most interesting. So a young couple who have a property, young children, if one of those sadly dies, 100% the surviving partner is likely to get remarried. 100% is probably a bit over eager, but very, very likely that that person is going to remarry because they're young. So unless there's a protected property trust in place, which ring fences the main property, the funds for that property the property goes to the new family, the new spouse, and the kids just gets washed over. So the kids of the original couple can lose out here. So if there's stepkids and whatever else are involved here, unless you ring fence that around a protected property trust, that property is not ring fenced for those children, the original children. Protected property trusts can only be enforced if the property is paid off at point of death. Therefore, there's a protection sale there. To me, that's proper protection advice. That is advising the client properly around super sticky business that you're doing for the right reasons. That's what a consolidator will look at, or I would look at when I'm coming to a business, whether people are aware of this type of thing. So again, write the GI, 10 times contact, which I go on about all the time, and know your numbers, know how much business is coming in, what your mortgage protection penetration is. Make sure that you've got that audited and built into your process. So here's 10 things you can do right now. Firstly, get trained in wills and trusts, or get someone in your business to be employed as a wills and trust writer. So this isn't getting free wills and doing it that way. This is learning how to do wills properly. So you're writing proper wills, you're doing vesting power of attorney, you're doing business trusts, you're doing discretionary trusts, and you're doing protected property trusts, and you've got a team behind you. So I did mine through Prestige Legal, who I think are PRIMIS, linked to PRIMIS. Exceptional, absolutely exceptional in terms of their depth of knowledge. And probate, you know, this is absolutely huge. And you can get on that course. The monthly premium, their direct debit isn't a lot, and they're brilliant. You know, I would recommend that. Define your culture. That's probably one to do in a pub, but you'll know what your culture is, whether it's super professional and straight and refined, whether it's jokey and comical, whether it's however that culture is defined. You need to get that out there in terms of social, so people know what you're like, and then you'll attract the right kind of clients. Use Dashly or eligible. So we're using Dashly within TMG, where it's paid on the back end of the proc fee. So this is mining of your existing back book. And actually, if you're ever trying to consolidate yourself and buy a firm, then you can use Dashly yourself to extract value out of that.
Is Dashly the same as eligible?
No, they're not. So, and if you push me on the nuances of it, I wouldn't know. I would have a look at both. And there's another one as well. Can't remember the name of it.
We've got eligible, which is awesome.
Yeah, I've heard it's brilliant.
Just a walk in the park, business. Just if you're established, business just drops in.
Absolutely. I can't recommend these firms enough. There's a gap there. And I think eventually they'll go direct to consumer. So they'll go direct to the lenders and providers. But, I think it's huge. I'm glad you said that, because I think they're absolutely huge for building that value. And it's frightening how much falls off the back end in the business. It really is.
Yeah, definitely.
Reviewing your existing protection book is key. So I'm not talking about every 4 years churning your book. It's not what I'm talking about. I'm talking about regularly being in contact, making that coverage still good for them, getting referrals off that existing protection book, and building it into a protection portfolio that's reviewable. That's really key. Speak to outsourced HR. If you want to contact me, I'll give you 5 different people to speak to at various different price points that we've kind of dealt with in the past. HR is key if you've got multiple advisors. It's a frightening number of advisors that with multiple brokers that don't have any HR in place in that business.
Is that from an employed perspective, Dave?
Yes. So anyone looking into the business will want to see that you have mitigated risk. Okay. So this is about a wrongful dismissal, a fight in the office, COVID protocol, all of this stuff that you won't know you're out of your depth with until something happens. For example, firms I've dealt with in the past where it was found from a client who phoned in to say that they'd paid their broker fee, but nothing had happened and no one would give it back. And then suddenly you find out that the brokers nicked the broker fee and pocketed it and done no work. As a principal, you're exposed at that point because you've got complaints, and you want to take that advisor and walk them gently to the front door and throw them as far as you can. HR at that point will advise you what to do, which is send them home, walk away, bring them in, have a consultation, send them away again, fire them. But you've got to follow that process, or to pay someone off for $5,000, because that's the best thing to do, because you actually are in the wrong when you threw a burger at them or whatever you did. The HR is crucial for that. You absolutely need it in place. Even if you've got one part-time administrator, they need HR and a contract and all of that stuff. It's actually really good for retention as well, for staff retention. So set an exit date. If you want to go at 55 or 60 or 40 or whatever, set that date. And then you can start working towards that date. And it's a movable feast, obviously. Start recruiting with the end in mind. Look at bringing brokers on who can fund the next broker. Make that change to the employed model. Eventually, I promise you, you will be deciding that the quite arrogant broker with writing 200 grand who comes in and says you'll never go employed isn't where you need to be anymore. You want that employment control, profit and control model. Make sure you continue to build your sustainable lead sources. Get outsourced HR. If I put that in twice. Yeah, there we go. Only got 9. And finally, get some coaching. If it's not, a lot of people do a lot of coaching these days. And again, this is not a pitch, because go with someone or go with someone local or Action Coach or any of these firms. Review this constantly. It's important that people are in your ear telling you about all this stuff and helping you get to the point that you get to, because at the end of it, there's 6 to 8 times some kind of value of income within this business, and they'll pay you 70% of that up front and 30% in 3 years' time, and that's life-changing stuff. and it's achievable, so I'll stop before I get too preachy, but I know we can all work towards this. Most brokers won't go anywhere near this. If you work towards this, it's something that can be really valuable to your business and give you an end goal. That's it.
Sweet. Cheers, mate. You're doing well with your Canva designs these days, aren't you?
Thanks, mate. Yeah. It's camp enough for you?
Yeah. Very pink and camp. That's what I like. Yeah, cheers for that, Dave.
No problem. It's quite daunting because you never know what the response is ever going to be on this stuff.
Yeah.
I'll probably go off and have a little cry after. That's just the way it is.
Yeah. Questions?
Yeah, of course.
Job. Process.
Yes.
I've been in the industry for 20 years now.
Yeah.
And sadly only just realized that I need a proper process that's robust and all the rest of it. Is there someone that you can bring into the business that builds that for you, or is it a matter of sit down, take some time out of the business and work it out for yourself?
Yeah, so it depends on you and budget and everything else. So there's a lot of people that will do it badly for you, I think.
Okay.
I think you really need people who have got a huge amount of experience in that business to come in and really drains up for a couple of days and to build that process. And it will go from, they should be looking at absolutely everything from your recruitment process through to your systems, through to your back office, all the stuff we talked about today, but also that sales process, how it works, everything else in between. You should walk away from there knowing that whatever happens in that business, you've got a plan, and I think that's really key, because those efficiencies will be in your business. Those 1% will be everywhere,
I mean, I think that the danger of a network is that you assume you've got a process because the network puts things in place. But actually, what you talked about there, like what's your product density? I'm definitely driven by, or the mortgage business drives me sort of thing. I wonder whether or not I actually control the business or the business controls me a lot of the time, because, I think everyone will probably say at the moment that it's really busy. The phone rings, you go on to the next mortgage, you leave all your holes because I'll do it later, and then it doesn't happen. And, there's only two of us in the office, it just gets left. And there's only so much scale you can build without that process, isn't there? So it's kind of just building it in some way.
Look, I have a duty to say this, John, is don't beat yourself up about that, because these are extremely unusual times. And we have been through the absolute mill as mortgage brokers positively in terms of the volume of incoming business and stressed clients and 150-day conversion times from start to finish on mortgages and whatever else. So look, when that process is there within your business, and look, if you need help, mate, I'll come and see you. I'm not charge you. I'll just come and see you for half a day and have a chat with you. We'll just see where we're at.
I'd take you up on that, Dave.
Yeah, no. Where are you? Northwest, I'm guessing.
Yeah, Northwest Ormskirk. You know Andy Evans, don't you?
Yes.
Yeah. So Andy, it's key. So yeah, that's Andy's still in Stoke-on-Trent. So.
Got you. Okay. Well, I'm happy to come up for half a day and we'll have a coffee and chat about some stuff. Look, do you know what? And it's an interesting point because we've got directly authorised brokers and network brokers. I'll be careful what I say here. There's none of them on the call, but directly authorised firms, I've kind of noticed, have less process in place than the networks, because actually with the networks straighten you back a little bit. The DAs, it can be a little bit Wild West because they have this feeling of autonomy. They're doing their own thing. It's kind of sitting back and everything's fine, where actually they're the ones that need it more than anyone, because they haven't got those tracks to run on. They've got complete freedom to bespoke their proposition, but tend not to. And the FCA, interestingly, want you to be bespoke. So look, you can only ever guess and take guidance from the FCA. They never tell you anything firm and fair unless it's a fine. But they want you to have bespoke sales process. They want it to be completely different and tailored. They want to know the story through a sales process and in a business. So they don't want off the peg. They don't want just, here's my new business register, there it is. probably a bad example because they're all the same, but they want your suitability reports to have some flair and some difference and some, you know, some nuance within there. They don't want off the peg. And I know historically networks have gotten a lot of trouble, the ones that aren't around anymore, for having off the peg suitability reports where you press send and off it went, and then the regulator hated it. There's got to be some art in there, and within your business, there's got to be some art within it. You know, there's got to be some flair and there's got to be some nuance, because John, you'll run a fantastic business there, I'm absolutely sure. And it'll be little tweaks, mate, honestly, that will make quite a big change.
Yeah, all of a sudden you can kind of see where the scale possibilities are,
yeah,
where the gaps are, and the gaps are only there because there's no process. And if I'm going to scale in any which way, then I have to fill those gaps. And then, you know, client touch points, you know, sort of reviewing the protection and all the rest of it on a regular basis. It doesn't happen because there's eligible tells me there's another bloody mortgage to write, and it's easy, isn't it?
Yeah, of course it is. Of course it is. You know, and we're fighting many fires and regulatory fires at the same time. It's full on. And look, I don't write mortgages because I couldn't do it. It's too hard. So I have hats off to any mortgage broker out there. You know, I write protection because it's easy. No offense.
But the opportunity is massive, isn't it? You know,
huge.
The mortgage door opens the protection door, which builds your business value. So you've got to do both or have something in you both. So maybe that's the secret, bringing in a protection advisor, and that takes one of the weights off your shoulders, sort of thing.
So if they do £1,000 a premium a month off your mortgage deals, that's 20 grand in your back pocket.
Yeah.
Of which you're paying them 3. And they've got a BMW 1 Series and think they're Batman, you know, and you've brought them through an admin process into being a trainee protection broker to a protection broker. Fearless, absolutely fearless. Some of these brokers, these kids writing protection because they don't care to ask the questions and make people, you know, be careful with the word disturbance, but, you know, it's to kind of put it across to a client. Yeah. The fear of the fear of not having protection in place, you know.
Mm-hmm. No, that's good. Cool.
Anybody else got anything for Dave?
Dave, I'm quite interested in how you've scaled up the ARs, because I've been taking on AR firms over the last sort of year.
Okay.
And we're looking to take on basically more. It's predominantly guys in their 60s.
Okay.
Who are writing quite sort of serious numbers at the moment on mortgage and protection book, and at some point are going to come to me and say, look, you know, what are we going to sort of take that on from? But I've went from just me a year past in September 2020 we started the business. We're now up to 20 people within it. And we just recruited another 2 more people there last week. So we were going through rapid expansion just now and quite high volume turnover. Okay. But it's just, I'm intrigued to find out how you've got so many, because I'm at the whole point now it's trying to manage that, and it's about, do I start stepping away from being the mortgage broker and having the business, or writing high volume of mortgages, which I'm used to? All
right, so I'll the MD will kill me, but I'll share all the secrets. But you know, there's a few bits in there actually. You know, firstly, we bring in permanent trading styles, not ARs mainly, because a permanent trading style you can get done in through referencing in a much shorter period than the FCA's AR process, which is at 4 to 6 months.
We've had everyone approved within 4 to 6 weeks.
Really?
Yeah, we had someone actually done in 3 weeks. We took from Stonebridge and went straight through, absolutely no issues. And so it's all been pretty straightforward so far. But I've got one part of the business, it's a trading name of Monarch, and they're second charge specialists. So
so is your question more around how you step away from writing business?
I've actually got probably 2 points. It's like, how do I scale and get this bigger and make sure it's kept manageable? And also, there's going to be a point. I mean, I wrote 62 mortgages last month, and also trying to do everything else as well.
Well, that's nuts.
And that's me not taking on any new clients. All my new clients go out to my advisors, so it's only existing customers. But I've actively and always actively worked my back book from day one, and clients are aware right at the very beginning the process of what happens when lenders contact them and always come back to me. So we've got a really high retention level. but yeah, I've been being honest, trying to step back from the business probably the last 4 or 5 months for a few different reasons.
Yeah.
And start to sort of manage it. I'm just not finding the time at all to do that. And obviously, if you've got all these different firms that are connected to you, you know, how's that managed? Have you got, is it operations managers I need to start looking at trying to bring in?
So within our business, we've got 3 senior directors in the leadership team of 3, which is Scott, myself, and Johnny, who none of us write. So I write a bit of business. I write protection for firms who are struggling, to show them that I can give them money because they should be doing it, and then I pass them back. So the other 2 don't. Every day, day in, day out, is on the business, not in it for us. Right. So that is purely what we do, meeting after meeting, after going out to see brokers, to organise a meeting, to just continually get that growth. Huge focus on MI, building an intranet, all of this stuff to help brokers to cut down all of that nonsense that they'll give you as an excuse not to write business when you're running multi-advisor brokerages. Yeah. So that's a huge piece of work. It is pure process driven. So we're making sure we're ticking all the boxes for the FCA, that we're getting audits from 2 different outsourced compliance consultants, that we are, and you know, every day changes 30 different directions every day, but there's no way we could write a mortgage case between the 3 of us.
Right, okay.
With the workload that's on. And I don't know how you do it, mate. Hats off to you again. Incredible.
It's a whole, I've been reading about it's the E-Myth, and it's all about, you know, businesses, and you can't be everything. You have to either be the manager, the entrepreneur, and the person that does the work. Yeah. And it's trying to sort of separate away from that to a point. I mean, I have no intention of selling for probably another 20, 30 years. However, what I am aware of is what volume of business now we are driving to be we're kind of very quickly become one of the key players now in Scotland. Yeah. And you know, there's other AR are people interested now in coming to work under our business model, because we're very much tech orientated with our processes and systems. And I think a lot of people now are kind of getting fed up with a lot of the networks and how the networks are treating them in terms of even things like doing joint life insurance policies. Yeah. You know, every single insurer I speak to goes single life in trust for the benefit of the other person, and yet you go to a network and they're like, "When you do that, we're going to compliance you."
Do that. Yeah, exactly.
So, you know, things like that, because we're DA, so we've got the DA proposition, but we're able to offer that to, you know, small firms as well. So, but then I've also now got the issue where we've got small firms who we've got 2 of our firms now coming to us and saying, "Look, we need more advisors." Okay. And it's like, right, so now we've got to try and recruit and help them grow and make sure all the compliance and training and things like that's in there as well. So it's a huge headache at the moment. So it's been great to expand, but it's now turning into an absolute, it's going so quick, a victim of success sometimes. So.
Can I ask you a question?
Yeah.
You're not knackered, by the way.
No, but it's just you've obviously went through the expansion thing, you know, for where you are with your AR proposition.
Yeah,
I'm trying to replicate that to an extent, but it's like it'd be interesting to know the structure that you've got in place to be able to do it.
Yeah, so we've got head of operations, we've got 2 in-house checkers, we need 5. We've got a IT guy who does our IT for us. We've got we get outsourced compliance through one of our mortgage clubs that we work with.
And who's that?
A Paradigm.
See, I've got TMA at the moment. Right, they're okay, but they're not really up for the scale we are. So we were looking at employing in-house compliance. So Paradigm handle all your 30 firms?
Paradigm do. We handle a lot of it ourselves in-house as well, but we have an external compliance consultant on top of that who comes in as well. So we're audited to the nth degree, because we don't, there's no point us doing all this work and slipping up on something daft.
Correct.
You know, and look, we're not sewing on limbs for a living in this industry, but we still need to get it right. And there's very few advice fails, but process fails. You know, we need to be on top of that. Some of the things we've really learned is case checkers are good when you teach them how to check a case rather than an advisor that's failed. That's been a huge thing for us in terms of the relationship with a broker. That's probably been one of the main things we've learned. whereas normally it's the other way around within networks. What else have we kind of picked up? Look, I suppose for us, every single broker that comes in, I have an absolute defined process from when I first speak to them to when they get appointed, written down 100%. And then from day one to month, from to day, whatever it is, 6 months, right the way through. I've got that right the way through the process. So we know wherever they are at any particular point, because it's so easy to lose control. And we haven't stopped recruiting at the moment, but we've massively taken our foot off the gas because it got a bit out of control. We said, look, let's take a step back and let's just not bring everyone in. There's a guy called Chris Target, and he does the social for brokers stuff. Mm-hmm. One of the most powerful things he ever said to me, where I thought, Christ, you've cracked it, was when he said, we're not taking on any new firms for 3 months. The most powerful PR exercise he ever did, because all I thought was, you are excellent at what you do. And that's the only thing I thought. There's power in taking your foot off the gas to improve those processes behind the scenes.
Yeah, okay. Good. That's fine. Some of that sort of out of control stage, not out of control, it's all controlled, but it's like the next stage for me is that's just going to be a bridge too far. And it's how do we get there without?
Ian, it's classic financial services, isn't it? It's the theory of constraints. You fill the coffers up, you put as many in the front end to see what happens at the back end, because 15 leads to 3 leads to 1, and all this stuff that's been indoctrinated and it's all over the years. But now, and previously, no one could value that. Now they can value that. And it's just key that you bring in expertise to help you get to that point. Because if it's not you that can do that, look, I can't write 67 mortgages a month, mate. Not in a million years. Some of my brokers do that in a year. So
I've got 4 admin though. All my admin do all my paperwork, so that's a big difference.
That would help, yeah.
Yeah.
That would help. But look, again, if you want me to come up for half a day and have a chat with you, again, this isn't a pitch. It's not what I'm about. I'll come and have a chat with you, no problem. You can
go and add you on LinkedIn if that's all right, Dave.
Yeah, of course, mate. Yeah, absolutely.
Yeah, it's just really interesting sort of how you were working, how it's all sort of worked.
Well, I'll come and tell you what the secret's are, no problem. We're proud of what we're achieving, and it's been really tough.
Yeah.
But we're getting there.
Perfect. No, thank you for that. Grand.
It has grown fast, isn't it? I'm not. Is it a year now?
Yeah. So we got network status in August, I think, July, August. So we've grown really quickly.
Yeah.
Yeah. Really, really fast.
Nice.
That's scary, really. New office moving that as well.
Yeah.
Yeah. Knackered.
Has anybody else got any questions for Dave? No. Right. Well, thank you very, very much, Dave.
Hey, no worries at all. John and Ian, if you want to send me a message, and I'll happily come and see you. I'm not asking about. We'll come and have a chat. And yeah, perfect.
Yeah, where's the best place for people to connect to generally? Just
on LinkedIn. You'll contact through LinkedIn and send me a direct message, and we'll go from there.
Cool.
I'll just send you a request, Dave. So
perfect. All right, mate.
Thank you very much.
Nice to see you, Sam. Take it easy.
Thank you.
That's all right, mate. Cheers, Dan. See you later.
Dave, before you go,
thanks, Dave.
Can you hand me back the admin?
Mate.
We have this every time.
Oh, how do I do that?
Go to the little dots. Can you see the little dots on my screen? If you hover in the top right of my box. Sounds a bit fruity for a Tuesday night, doesn't it?
What am I doing?
If you hover around my box on the top corner. You just wanted me to say that again, didn't you?
Yeah.
Wasn't it?
Top corner.
The top right-hand corner of my...
Oh, here we go. If I go and put participants, and then I can go more, then I can go make host.
Yeah, that's one.
There you go. How's that?
That's it. Perfect. Now,
alrighty.
Yeah. Thanks, guys.
Yeah. Bye. See you soon, everybody.
Yes.
Take it easy.
Thank you.
Bye. Bye. Bye.